Alrighty, traders, good afternoon, good morning, good evening, and welcome to our trading session here in the AAA session on Monday afternoon. Glad to have everyone here. I trust everyone had a fantastic weekend and nobody fell off their scooter over the weekend. No, I did not do that. I'm just letting you know. But hopefully you guys are all ready to rock and roll this beautiful weekend. As we go into the markets, we got a couple of reports coming up. Specifically on Wednesday, we have the Fed's rate decision. Expecting to keep the rates unchanged, but we know that it all comes down to the verbiage. But we'll take a look at the technicals this afternoon and see what's going on. We've got a lot to discuss around stocks as well. I know Chris is here, and we're going to have Tyson popping in as well. And we're going to be talking about different assets, different ways of trading the markets. So with that being said, by the way, in Bitcoin, Ethereum, all the cryptos are starting to make their move too. We're going to talk about that as well. So without further ado, let's go ahead and introduce the panel for today. And you'll notice that we have Tyson. Tyson came in a little late this morning, or this afternoon.
Don't blame me. You got to blame the FX chief on that one.
Oh, fantastic. Oh, good to have you here, Tyson. So we have Tyson. Tyson, how are you doing? Chris, how are you doing?
Doing well.
Doing good. It's good to be here.
Good. Excellent. Well, we've got a lot to talk about this week. I know that it is the battle of the Titans this week between Chris, Tad, and Tian. And we're going to have a little bit of conversation about that as we move through the week. I know we've got a couple of webinars set up this week as well that we definitely want you guys to jump in on. But let's get started on stocks. What do you guys got to say on stocks?
I'm going to go ahead and say that this is a major earnings week. For the most part, earnings have been getting crushed in a good way. Like, companies that have been smashing expectations, consensus-wise, estimate-wise. Like, everything's coming in better than expected. We've priced in a lot of optimism. We priced in a lot of, things are good. This was a big week. We have Facebook, Tesla, Amazon, Google, Microsoft, Boeing, Procter & Gamble. I mean, it's like 1/3 of S&P 500 companies are reporting earnings this week. So bank stocks have done well. Last week, retail stocks have done well. This week, tech stocks essentially looking to do well. So Tyson and I had a session this morning. I think that it's just remaining. Don't rock the boat. It's path of least resistance. Stay bullish. And we wait for, that correction we were talking about last week. We wait for it a little bit longer. But I think it's something right now that this week earnings are going to come in fairly positive. And the market's going to continue to price it in. I mean, look, we had a 3% sell-off, like for a scare for 2 days, and then we rallied 4% to retake the highs. So Dow's at, retesting May highs, S&P's at new highs, Nasdaq's at new highs. I mean, why fight it? So that's what I'm looking at stock-wise.
Yeah, Chris, and I agree. I mean, it's one of those things. You've been saying this. It's what is going to throw us off, and that's the question. Everybody's been looking for that sell-off, and the sell-off will come. It's just a matter of what's going to throw it off. But I'll tell you, I want to talk about housing for a second because it actually spins back to the overall stock market. So I just sold my house. We actually closed on it this afternoon. I go and sign my closing papers and all that, which is cool. But I'm like, okay, geez, do I really want to buy another house in Florida to buy? We're buying at the highs But then I started to really dive in and think about in comparison to the market in 2005, 2006, 2007, when it really started to get overinflated. The average, now I'm not going to go through all the numbers, but here's how it kind of spins out. With the average home value, the home sale value, and the mortgage rates compared to the average income in 2006, the debt to equity or debt to mortgage rate on an annual basis was about 38%. So whatever the average house was based on interest rates was about 38%. Right now it's like 31% because rates are so low. So my point is this: the consumer's not over invested. They're actually pretty flush with cash. This is what's going to throw us off. It's not going to be some consumer debt. It could be corporate debt. Corporate debt has now surpassed $10 trillion. We're now starting to think about some buybacks. So that is one of the concerns, but that's down the road. If interest rates go up, are these corporations going to get too aggressive on buybacks using some of that cash? And then they're going to be in a year or two, they're going to be like, oh man, we need some cash, but now the cost of cash is more expensive. I don't know. But my point is this. It looks to me, Chris, Gary, we might have another 6 to 12 months in this rally to go. I still expect a massive sell-off. It's going to probably end bad, but I don't see anything on the horizon that tells me it's going to end today, tomorrow, or in the next couple months.
Yeah, and Tyson, we talked about this last week too. We talked about it's not a demand issue. Like, I mean, we're talking about personal wealth is probably the highest it's ever been. The demand is still high for housing, even with low inventory, but super low rates. It's like people are still going to buy houses. People are still buying houses. People are still closing on houses. People are still refinancing their current homes. The net wealth of the consumer has gone up a lot. And this isn't just in the US. This is essentially globally. So, could there be enough of a supply chain disruption to start to see like there's cracks in the system, just like we had back in 2020 when, things are backlogged, things are bottlenecked. It's like people are tolerating it. Look, Tyson, if you and your wife are gonna buy a new house and you go to get furniture, guess what? You might wait 6 months to get furniture. But that's not gonna prevent you from buying the house and still looking to buy furniture. You'll just get something temporarily if you can off the floor. So I think we still have a sustained demand, and people have, like I said, they're in good health. I mean, Tyson, debt to equity 31%. That's a big difference, and the fact that we've probably added $2 trillion to the monetary system over the last 12 to 24 months. That's a lot of money that's floating around that has to do something, that has to go somewhere. And you and I both know with super low rates and nothing really yielding, and it has to go in the stock market. It is going into the stock market. So from a consumer standpoint, I think the demand is still there. I just don't. And again, I don't know what the catalysts, it's going to have to be plural, because I don't think one thing is necessarily going to break it. If it's corporate debt, if it's a COVID Delta variant, if it's geopolitical risk, like all these things are going to have to line up for the market to actually sustain a sell-off and a correction. Technically, look, I'm still calling for it. I still think we have an 8 to 12% reasonable, healthy correction around the corner. But honestly, like I said, I think I said this last week in AAA, we might go this entire year as another outlier of the market never loses a month. It's higher, it's higher, it's higher, it's higher. And then all of a sudden we just have a Q1 correction in 2022. That's all it takes. So it's like we could just keep sustaining, like let the good times roll, don't disrupt the boat, blah, blah, blah. And all of a sudden we just look at like, wow, look at that. What a great year if you just held. So
the one thing that's concerning me just real fast, if I'm like saying, okay, well, what could geopolitical risks? There's some real stuff happening with supply issues with China. These are real things. Like this is not a joke. For sure. Crackdowns with China stuff. There's lines being drawn right now that I think could eventually not be real great lines for the capital markets. With some of the crackdowns and some of I mean, there's rumors out there, and I have a friend that's in the shipping business that he's saying, listen, this is not, supply issues aren't the issue. It's constraints on actually being able to get the supplies from places that we need. China's like hoarding ships and stuff like that. Like we're in this kind of weird, awkward underlying trade war that not many people are talking about, but that could start to get some headlines. That could be a catalyst, but we'll see.
Yep. Good point. Gary, what do you got?
Yep. So I'll just listening to you guys and just me personally, moving and shifting over to Forex right now. I'm very much monitoring the dollar at the moment right now. We've actually got a nice setup. If you look at the charts is showing us. Oh, not bad. That's not the charts. Let's try that again. There we go. There's the charts. All right. So if you take a look at the charts right here, we have a very good setup on the dollar. Now we know we've got the interest rates coming up on the Wednesday, and they're going to keep the rates unchanged. But we all know that there's going to be obviously a lot of discussion with inside the verbiage in the statement that's going to change the momentum of what we're currently seeing right now. Now I don't know what is going to be said, but I can tell you what the charts are going to be looking at. Doing at the moment right now. And right now, we look for a breakout of the support level. If we do break out of the support level right here, we're on our way down. And I actually evaluated this in my session this morning. And I'm actually going to be doing a video as well on YouTube and getting that posted today. But I'm looking at the dollar. And the dollar at the moment right now, if I compress the charts, I still see this wave. And everyone knows that I like to trade this wave structure. We still have a wave 4 right here that's still a hidden target that the market's looking to chase after. This particular high right here is definitely still out there. We completed the 5th wave, so we're definitely looking to slowly work our way back up to this level. Now, the question here is, are we going to see a dip first before the rally? And I believe that could be the case. And if the dip's going to take place, then we could drop back down to take out this low, which is, by the way, an inside fourth wave. So it's an internal fourth wave. That's why this level right here at about 11,831 is so significant. Now, the reason why I'm bringing this up right here is also we see this nice divergence here, indicating that price is going to drop back down. This is the daily time frame. And again, why am I bringing this up is because, you know, I'm going to look at the other pairs that are traded against, all the other currencies traded against the dollar. And we've got the Euro US dollar right here. If I go to the Euro US dollar, take a look and see this setup right here. I just absolutely love this. Look at that. We have a nice little break. It's starting to break through that falling wedge right here. If it closes up above there, and we see this divergence here also on the Euro US dollar, I think a good play this week is going to be Euro US dollar buy. But I believe there's going to be a correction. So how do we know that? Well, go back down to a lower time frame, right? If you take a look at the lower time frame right here, and I go ahead and compress the charts a little bit, we can see that there was this breakout. And the breakout took place right here. Let me draw a bit of trend line so we can get it sort of like on the highs. There it is there. So we can get that nice little touch right here. And by the way, I'll share this chart with everyone. But if you look over here, we got this nice little touch right here. It broke through, then came back in. So we didn't really have the initial breakout when we had this big rally right here. Then it came back inside again. And so we have now a second time we're looking to break out of that falling wedge. And so I do believe there's going to be pullback, right? There's going to be pullback. You can see we're in overbought conditions. There's going to be pullback. The question here is how far? Now, if I go ahead and draw in this level right here from there, that is a wave 1. And then this is a wave 2. And we go all the way to the top right here, to this level right here. And look at this. This is what's so interesting. As you look over here on this chart, you can see that price moved to a wave 1. Then we had our little pullback, never took out that wave, the starting point of wave 1. So we had wave 2 right here. Price then rallied up all the way to the 1.618 right here. We had a dip, all right, came in a little bit deeper than we anticipated, but then continued to rally to the 1.27, right? So we had that hit, and now at this point right here, I'm starting to see an indication based on my FX Market Fusion system that we're now seeing an overbought condition, so traders should start looking to sell. Now the target on this is going to be the low down here, which means that we're going to come back, retest this level, possibly get a little spike here, and then start working its way back up. So on the Euro US dollar right now, selling opportunity, all right, as we get down to this level. Now we do have Wednesday. Now this is very important that everyone note this. We have Wednesday, we have the rate decision at 2 p.m. in the afternoon. At 2 o'clock, if price is at that level, of that support level, of the backside of the trend line, it's going to be an absolutely great time to start buying, which means that my thinking right now, Tyson and Christian can add to this too as well, is that if we're at that support level, man, do I wait until I see major high, or at least do I wait until a daily candle close out bullish, or do I wait until a bearish candle close out back in the range to make a decision whether I'm buying or selling, or do I just simply go ahead and start trading that based on my overall technical analysis telling me that price is going to go back up north? Well, there's different ways to trade it. If you're looking to enter in at that support level, me personally would go in with a cost averaging strategy, which means if I'm wrong and the price does move down further, all right, which means I'm buying and price moves down further, then I could go ahead and buy back in at certain support levels again to be able to get back to break even or make a bit of money and then get the heck out of Dodge, because then I'm back inside the range. But if I buy and the market does take off, I've got it at a very good price, and I can start adding to that position as we see dips in the market, as the market starts chasing after another high. And we can look at the chart right here to look what that high is going to be. Yeah. So if we look over here, let's see here. We're looking at, let me just clear up this. So we're looking at the chart moving up to a daily target. Or I can even go ahead and do this. I can take this target right here, extend it, and my daily target will now be set up here, or at least my long-term target will now be set up here at 1856, right about there. So when we dip down here and we drop back down to about 17, let's see what that level is again. That low is down there. We're going to be chasing after a low down here about 1780, and we'll be looking for a target about 1856, and that'll be just the initial move and the initial breakout. So for those intraday traders looking to capture profit on the downside, there could be about 80 pips to the downside, and then another 100 pips to the upside. So you create sort of a sell and a buy option of about 150. No, what did I say? 80 and 100, about 180 pips total on a sell and a buy going long. So I like that play. I like the Euro US dollar specifically because it's not a very violent pair like the pound JPY. I mean, you get in that, it can move 150 pips like this. The Euro US dollar gives you opportunity to be able to scale in or scale out depending on how you're trading it, and also be able to not put too much risk on the table. The margins are low in that, spreads are low. It's a good pair to go ahead and trade for these type of conditions.
Gary, I was just going to say, what's your favorite? I was going to say, let's piggyback. So Gary's favorite looks like euro dollar, some really good position on that one. It's funny because I would just flip it to the dollar Swiss. I like the dollar Swiss a lot. I think that's one of my current position I'm going to continue to run with. I am kind of permanently bullish on dollar Swiss. I'll let it, potentially fall back into the we had an FOMC or a non-farm payroll. I think it was an FOMC level, must be FOMC, back in, looks like June 15th. So I could see the dollar Swiss coming back down to that level, but I'm essentially kind of, buying very small down to those levels. And I'm planning on the dollar Swiss continuing to head up into 9,300, 9,350. So that's one of my position trades that I really like. It might take, maybe 1 to 3 months to have it play out. But I like where it's at. I think that we have corrections on dollar Swiss that look to be heading back towards 9,600 or higher. So if I can scoop it up around 9,000, take it up to target 1 at 9,300, take it up to target 2 at 9,600. Those are all the levels I'm looking at kind of permanently long on dollar Swiss.
Yeah, that actually fits with what Gary's looking for too, because Gary's trading the euro dollar is it's more of kind of a shorter term swing for the next 1 to 2 weeks. But then what Chris just said falls in line, Gary, with that wave 4 structure on the daily that you're looking for higher. So I think really you can kind of take the trade that Gary was looking at, sell the euro dollar, then buy the euro dollar, and at the same time that you're selling the euro dollar, and then you're buying it, you could be that could set up Chris's trade in the dollar Swiss. So I think you could take all of those trades at the same time and do really well. My currency that I'm looking at, and I think both of those trades that they set up is great. But my currency is one that you just mentioned, Gary, pound yen. Pound yen is I like where it's sitting right now. I could see it going higher, but the reason I like it at these levels is we put in what's called a bearish money flow pattern last week. Now it's not a forecasted reversal pattern, so we got to be a little cautious on this pattern. But it is sitting at a level where it's just most likely it's going to be difficult for us to blow right through this. So I actually like the current level we're sitting at right now, right around 152.50. Don't mind taking a shot here. If we get up to 53.15 or so, I'm going to take another shot there. So within this 50-60 pip range. I think that we're staying below for this week. My forecast is that we stay below about 54.20 or so. And then I'm going to target, I think we have a chance to push back to 50. And so I think we're going to kind of stay in this range between 53 and 50 for now, maybe over the next couple weeks. And with that, I want to sell at these highs and I want to buy back at the low. So I'm going to sell around this 52.50 to 53 level. And I'm going to target right around 150, 150.15. With the stop around 154.10, 154.20, mainly because of where we're sitting. We're sitting high. You look at this and, you look, well, geez, Tyson, it's rallying. And I always look at that and I always say, yeah, you're right. It is and has been what's next. And prices wave. So the next wave is likely down. And I like where we're sitting right now.
Yeah, I must admit, Tyson, looking at the chart right here, I like your play. I've actually gone short this morning on the pound JPY. I've got multiple positions on that. I actually went short over here as the 4-hour came back to retest the 200 EMA right here. So we had the 200 EMA right here tested, and a lot of times the market bounces off that. You can see right here, look how many times when it gets up to the 200 bounces off there, 200 bounces off around, and we've just come back in and retested. I know that Chris, you look at sort of like how long is it has the market been in a certain move, and when is it anticipating it? There's so many days, right, that you look at the candle bars before it's gone ahead and retested that level. And what is your perspective on this?
So pound yen, I don't have really an extreme that I like. I'm looking at a daily level. If I'm using the right trader system, we have about 153 bars. That's not extreme enough. I'd like to see it if it was a 225, 250, which I know, for 100 daily bars, that's a long ways away as far as time. However, when we did get overstretched back in the highs of May of this year, we had enough distance away that I was looking for a move back in. So Gary, if you go to the daily chart on the pound yen, you can see you're on the daily chart. Okay, I see it. I got it. I'm watching the YouTube channel, so it's a little behind. When you go to that high, we stretched far enough away from a percentage basis and a pip basis. I mean, we were 1,000 pips away from the level that I'm essentially looking for to balance. So it just so happened that the pound yen was not just the only one. We had Aussie yen at extremes, we had CAD yen at extremes, Swiss yen at extremes, we had bar counts on those other yen pairs. And so I was looking for yen strength at that time, and it just so happened that, the yen basket played out really well. I just never had the extremes that I'm looking for elsewhere, but I had literally six of the 7 currency pairs of the yens were looking for yen strength at that time back in May when we established those highs. So right now, I think we've done a fairly decent job pulling back. I think what's interesting is, Gary, at the lows on that pound yen, can you connect the dots at those lows around 149? Those lows around 149. Because it's like, there's lows are like 148.50 and 149, and I want you to connect those lows to what we just saw back in it would have been July 20th, so last week. So
there's
I'll give you the shortcut. Look for a head and shoulders pattern.
Okay, so you're looking at here's the
see the lows back in April, the lows in April.
Yep.
Connect the April right here. Oh, there, yeah.
Yeah. Just connect the lows from April to the lows we had last week. Yes, exactly.
Okay,
so
gotcha.
If anybody is looking to short the pound yen, and I'm talking about a short opportunity that could be like 1,000 pip plus move. Wow, that's alliteration. Say that 5 times fast. 1,000 pip plus move. It'd be the pound yen if we break that neckline at 148.50 or 149. And so this is why I like the setup. I have made thousands of pips on the pound yen with these patterns. The hard part is waiting for it to confirm, because if you're trying to sell it early, you have to have an exit strategy, because it certainly can go back and revisit those highs, right? It can go back to new highs. Tyson and I are talking about, we think path of least resistance in stocks is still bullish. How does the yen stay strong if all the markets in the stock world are rallying? It's pretty tough to get that. We've had 2020 and 2021 have been this poster child of risk on versus risk off. And if we have risk on trading in stocks, we're probably going to have risk on trading in currencies, and that doesn't favor yen strength. So here's why I'm saying this, and Gary's drawn that chart out. Because if we break that neckline, I think there's 1,000 pips or more to the downside in the pound yen, and that would be an amazing opportunity, but it has to confirm. Without that confirmation, I'm probably going to stay out of the pound yen and just stand on the sidelines, and I'll try to find other trades.
Okay.
So and just to clarify, 100% agree with what Chris just said, because I think a long term we could see 1,000 pip flush down. I wouldn't take a long term position until we get that confirmation. But this is one of my top money flow shorting opportunities just for this week. After this week, we reset. So I like the short side for this week. We'll see how it responds, and then we'll reset it in the next week. But I think long term, I'm looking for a little bit of a confirmation break to the downside. In fact, so much so that I'm kind of in the mode of ignoring bullish reactions, not selling too early, but almost ignoring all bullish movement and just waiting for that nice confirmed move to the downside to get any structure anything long. But by doing that, I could be missing out on a lot of profits to the upside too. So I don't want to say that that's the best way to do it, but that's kind of where I'm at right now, because I am bearish on it. I see some really nice long-term patterns setting up, but only willing to take some short-term opportunities and then waiting for those longer, bigger plays to set up.
Yep, I agree.
Yeah. Hey, another pair that came to mind, and if I go to the currency strength dashboard here on the right hand side, go set to the weekly, and I've got the Canadian JPY set up here with a very good rate of change, and the strength is 14, so it's pretty good. You can see right here it's showing that we've got strong CAD, weak JPY. Now, I'll be honest with you, that was a close on Friday, come the open of this week, and so last week's indication was indicating that we've got a Canadian JPY strong move. Now, if I go to the actual chart, I want to go to the daily right here, and I want you guys to comment on this as well. But I've got Canadian JPY set up right here, CAD JPY, and I'll notice right here that we're right at this previous high. This is what we're looking for last week. Last week we actually traded this long. I think we actually had a trade on this on the smaller time frame. Let me see here if we've got it set up here. Oh yeah, here it is here. So we actually had a trade right here. We had an entry point. We had a profit target up here. And so we're buying this long in last week. For those who are wondering what these red lines are, these big shadow lines right here, this is actually weekly open. So this is where the weekly open started. So this week, we opened up right here, but you can see as we hit the target last week, and we were bullish last week, which was fantastic. We had a bullish signal last week as well, even though this week is bullish as well. I have to question whether I still want to be bullish on this particular pair right here, because we have this resistance right here on the 1 hour, but we also see on the daily, we have that previous wave 1 right here. So I'm questioning whether or not I'm going to trade this. What I probably want to do is I probably look for some confirmation. What is my confirmation going to be on this? Well, firstly, number one, if I get a good bearish candle on the daily, that'll be one to be bearish. But if I do see it break above this consolidation right here, then maybe I'll go ahead and wait for some confirmation of a buy, which means the price goes up, comes back to retest, and I get a bullish signal, meaning that the oscillator goes back down here. It gives me a good solid signal here, but it's got to be above 88.02. I would then go ahead and look to buy long. But if it does break through this this channel here on the bottom side, and we do have confirmation on the 1 hour that it's bearish, then I'm going to look for anything that's bearish and go ahead and sell it. In fact, if I have anything bearish here inside the range at the top here, I may even go ahead and start looking to sell short so I can trade inside this range. Because this range is, well, it's about 50 pips. So if you're doing intraday trading and you're looking for that 30 to 50 pip targets, if it's coming up at the top here, you'll get your 50 pips as it goes ahead and chases off to the bottom of the range. So that's something to keep your eye open for as it starts developing.
Yeah, Gary, I have a bearish bias for just this week. It's actually my top trade for the entire week is the CAD yen looking to sell. I like where we're at right now. I have a target of 87.03. I don't know if we're going to get there this week, but I do see us pushing down to kind of, we've got a pocket demand level sitting down there that I think we can go fulfill before that next big push higher.
Did you say 87.03?
Yes.
Yep. Well, if you break 87.44, I say I think it's a sure thing getting down to that level. So let's go back to and again, looking, if we get a bearish candle over here, this is a very strong move to the upside. There's a lot of place, a lot of room for even at just a retracement move. But long term, if you look over here, I'm still chasing after the market's lows down here. I'm looking for price to go down to 84 and change. So yeah, this is going to be key. I think this is I always look at these as huge opportunities. And if I move this over to a daily right here, I'm already starting to see Canadian start to weaken a little bit. See some Canadian weakness. JPY remains weak, but CAD is starting to give back all its gains it had from last week, and so there may be a very easy trade shift of momentum in the mid part of this week. So I think this is a good pair to look at towards the mid part of the week as we go to Wednesday, Thursday, specifically after the non-farm payrolls. Sorry, the rate decision.
I like it.
What do you gentlemen think about oil? I'm curious, do you think oil has the ability to break below the recent dip at like mid 60s? I was looking for 75 down to like 55. We came down to, I'm trying to think where the lows were from last week, maybe like mid 60s. I think oil dipped to around 60. What was that? We dipped down to
65.
Not even. We went to $70.54. I mean, I'm still thinking that oil. Oh wait, you're right. $65, right? I'm looking at the daily. Here's the daily chart. Okay, so yeah, $65. Do we think that oil can slide lower than 65, or are we just going to establish another range? And we're kind of, working through the top right now. Maybe we have from 65 to 75, maybe a little bit of a topping range, but I'm still looking for oil to slide lower. I don't. And again, like, technically, I'm convinced that oil needs to correct and come back into the mid 50s.
I think if we break the lows, I think if we break those 65 lows, I think it's almost a falling knife down to about 50.
I mean, I was looking at 55 to like protect, and like I'm looking at $51 is like get out, protect all your profits. But I've been looking at short from $75, $76. So
you think about it as far as like risk versus reward. I like the sell side on this because okay, is it guaranteed? No, I don't think the probability is more than 50-50, right? But you take a short right now, you're risking $4 for the potential to make $21. Would I take that risk versus reward? Even if I have a 45%, 40% probability, I would. And so I think oil's sitting where it's at right now, coming back to those kind of those supply pocket levels, sitting, I think, at an overstretched, area, bunch of targets to be hit on the downside. I would absolutely be willing to take a shot on the downside because of the risk versus reward equation that it offers right now.
Yeah. I think so too. I'm also seeing some like hidden bearish divergence. Like we had that little pop. It was aggressive off that past resistance at 65, came right back up to 70 and change. I just think it's going to have a hard time getting back above 75. So, right now it's at $71.83. Like Tyson said, it's a great opportunity to short. You have minimum risk. Anything above 76, okay, it's not worth it. But if it stays there and cooperates, then from 71.81 all the way down to mid 50s, that's an awesome reward opportunity.
I would say the best way to sell it is what Gary brought up. I think the CAD yen is the optimal way to sell the oil move.
Yep.
Yeah, absolutely. If you look at the chart right here, guys, this is what makes me so convinced that this thing's going to drop. There's no doubt in my mind, and there's a lot of reasons. Firstly, number one, we can see as soon as price goes into an oversold condition, I'm always looking at this low right here, and the reason why I'm looking at that low is, and that's at 65. Is because in order for us to have divergence, price has to take out the previous low, and we need to see the oscillator still moving bullish, right? And so if I break this down on a chart, you'll see that we've got a wave 1 that went up here. Then we had a very shallow wave 2. We actually chased after the wave 3 up here. And then price moved back down here, and now we're going to wave 5. So this is actually the wave 5 right here, which means that this low is a very attractive level price is going to chase after, which is right there at that $54 mark. Now, you guys are quite right. If it takes out 65, it's going to be definitely dropping down because that's the target to the downside. But once we take out that 54, then we need to watch out, because if the oscillator is going to be something like this, and we see the oscillator moving north, and we've got this big divergence set up right here, price is going to start rallying up and rallying up sharp. So I think 54 is definitely a target. Now, if I go ahead and add in my technical analysis here, you'll see here that, let me go ahead and add it right here. There's a lot of stuff there. That's why I took it off for right now. There's that wave 3. Here's that wave 4. And there's the wave 5 right here. Confirmed that we're heading south. And now we're looking for this level right here. Let me get that exact price point. And we're looking at around about, 57.47. So 57.47, right about there. Once price takes out 57.47, start looking for buying opportunities, because it's certainly going to go ahead and rally back up. Now, if I go to the lower time frame,
I would look for short-term buying opportunity or medium-term buying opportunities to take us maybe back up to 65, create a right tip or right shoulder, and then fall again, because I think we're going to have a reverse gap fill back to you go back to the chart that you were originally on and zoom out. You'll see that gap.
Oh, zoom out?
Yeah. So right at put a line at about $33 right there. Yep. We're going to come back down and tag that upper pivot where it gap down and then it rallied up. That upper pivot, I think, is ultimately right there. Exactly. Yep. And so the way we get down there is we sell off down to the levels that you were looking at. We then rally, creating that divergence rally, maybe back up to 60, 65. And that's kind of that kind of crowning or head and shoulders pattern confirmed. we then break and maybe go see 30 to 35 before it's all said and done. That would mean that would be your 8 to 12% sell off in the equities, Chris, right there.
Yeah, I see that.
Likely.
I got this right shoulder right here, right there at the left shoulder there at around about $42. The only thing that I question whether we're going to get down there is that, I mean, we broke out of that. If you look over here, if I move it to a weekly, you can see it a lot clearer here. We're breaking out of that wedge. If we do come back in there, man, we could go back down and test those 26 levels because we're back inside this big wedge right here, and it's failed to break out to the upside.
This takes a lot longer. You see what I'm saying? So we drift down to 35, but this is like a 2-year. You know what I'm saying? Where we drift, it takes 2 years to get down there.
Yep, absolutely. All right, cool. Hey, cryptos. Let's move over to cryptos. What are you guys looking at cryptos? Because we started seeing over the last 24 hours some really good moves. Are you still chasing after $20 on Bitcoin? $20,000 on Bitcoin?
$20. I'm all in. I'm mortgaging every single thing I have.
I'm into. But what about 20,000? You still?
You know, I mean, we got headlines with what is Amazon accepting crypto, not accepting crypto. It's a big deal. That's a really, really big deal. But I want to buy with institutional money, and institutional money is able to mine at about $15,000 to $20,000. So that's where I'm going to buy.
Okay.
Get down there. Now, when mining costs go up, I'll buy higher, but mining costs haven't went up yet. So.
Yeah, but could it be that mining costs could go higher as prices go higher, and you never really get an opportunity to get in because it never really matches up that level?
We've always come back down every single time in the last 12 years. We've gone 2, 3, 4 times higher than mining costs. We've never stayed 2, 3, 4 times higher than mining costs without coming down even below. We typically, if mining costs are, let's say mining costs are $10,000, we typically go 20% under that historically. So maybe this time history is different. I don't know. We'll see.
I was gonna say to you,
Ethereum. Can you bring up a chart for Ethereum?
Yeah, absolutely. Let's do that.
So if you have a template of the indicators on there, if you want to show viewers out there a target, specifically the monthly targets, and the reason why is ever since we had our big flush down with Elon Musk tweeting and China cracking down in cryptos and everything was falling and cryptos can't win, all I talked about for the last probably 2 months is I like buying cryptos in the short term targeting the June target. So right now my sights on Bitcoin, I'm in Bitcoin at 30K and I'm targeting $42,500. That's short term. That's a June target. Okay. Ethereum, I bought it at 1850. My target on Ethereum is 2950, short-term target from June. So what I'm doing right now is I'm playing these recent support levels for, and I mean, I did this in my poll report. I talked about this in my trading room. We've had 60 to 80 to 100+% opportunities on some of these cryptos just to get back to those June targets. And that's what's crazy. It's like, you'd think like, how do you make 100%? Well, if you have this massive exponential run to the upside and then 50% of your value or 60% of your value is wiped away, it's easy to make a 60, 70, 80% like climb from new lows and go up for that type of opportunity. So, if you're still holding Ethereum from last year at the lows at $500, I mean, you're not up 100%, right? You're still up like 300-400%. But I'm talking about the equal lows in Ethereum at $1,800 or $1,750, and you have a June target. Okay, right there, just that run is 66%. So here's what I did. I just took a couple $1,000s, threw it in at those lows at $1,800, and I'm looking at a 66% gain on that investment. Now I'm going to take that house money and just like Tyson, I want to buy Ethereum again at $1,850. I'd love to buy it again at $1,500 or $1,000 if we ever see those numbers. I don't know if we see $4,300 on Ethereum before we see $1,500 or $1,000. And I think that's the question everyone's wondering. It's like, okay, wow, finally cryptos are starting to move. But Gary, wave cycles, right? I mean, does Ethereum from that recent flush down look like it's going to go back and retest the highs? Because to me, it doesn't. It looks like we're going to come back and find an equal high, which is right around that June target, and then flush back down to retest these lows. That's what I think.
That's my argument real quick. It's not that Bitcoin can't go up. My argument is this. We're going to see 20,000 before we see 65,000. That just,
Well,
I mean, we might see 52,000, we might see 55,000, we might see 42,000, but I believe we're going to see 20,000. And also, I'm missing out on all these little small pops, or not small, these nice pops that Chris is taking advantage of. Because when I say I want to buy at 20,000, I think that that's a generational buy. I think that's I can buy, I can fall asleep, wake up in 5 years, and have a lot more money if I buy at that level.
Yep.
That's kind of the way I'm looking.
Well, you know, my philosophy, you know, we've had this discussion around cryptos before, specifically on Dogecoin, and I know you're like, not happening. But this is the thing. Just like Chris is saying, you know, buying in, taking profit. My philosophy, I actually had a conversation with my son, Cameron, you know, this weekend. He was over here, we was in the pool, busy having a few drinks and just chatting about investments. And he said to me, Dad, what about cryptos, man? I've got money in there. I'm down on my cryptos again. And I said to him, hey, a conversation I had with you last week. What did I say to you do? And I told him when Litecoin was down at 100, I said, go buy. And he did not do that. And he said, yeah, but Dad, now it's at 125. In fact, we looked at it, it's now at 136 now. But it was at 125. And he said to me, yeah, but it's 125. Should I buy now? I said to him this. I said, you've got money in your cryptos. There's no reason for you to go ahead and panic right now. But I said, what you need to do is you need to set your levels. And you need to be disciplined and say, hey, if the number comes up, specifically Litecoin, and we said $100, buying at $100. If it comes up, buying at $100. If it goes down to $80, if that's your number, every $30, every time it drops $30, you're buying back in again. So what you're doing, you scale it in, and it gets down to $30, buy back in again $30. Because what's happening is, if you bought at $100 and price went up to 38, which it did. Well, no, actually it's higher. I think it's
138.
What is
138? Right
is
now.
It 138? Yep. Well, if it goes up to 138, he's made 38% on his money that he can go ahead and cash out. Now he can cash out only the coins that he bought at 100. Cash out those coins, he's made 38%. Now remember, he's still got cash in from his previous investment. And I said, if you're wrong and the market just continues rallying and you took out early on those, that's okay. You got money in already. Let it go. But then if the market drops back down to 100, buy in again. If it goes down to 80, buy in again. Goes up to 50, 40, you're making 40%, 50% of your profits. Cash out. Leave your initial investment in as a long-term investment. But keep buying in because you cannot go wrong. I don't believe it. You cannot go wrong buying at the lows on cryptos and taking some short-term profit, but leaving some in for that holy grail trade that we may get, you know, like we did back in 2017. So
I'm so proud of you, Gary. So proud
thank you, Thijs,
for telling your son to buy a legit coin. Thank you. Thank you. No, seriously. But you that's perfect advice though. And here's the biggest takeaway from what I heard with Gary. Set your buy orders and set them there because it happens fast. Yep. And so if you're like mentally, because I don't have a buy order at 20,000, so I'm mentally like, I'm going to buy at 20,000. But honestly, guys, I could go to bed, price could flash down for 3 minutes down to $20,000, and by the time I wake up, it's at 33,000. That could happen. Sure. In fact, if it gets down to 20,000 or something like that, that's probably how it's going to happen. So you're going to have to set your orders in before it. Find your levels that you want to buy. And I think Litecoin at 115, 100, 75, all of those levels is phenomenal. I'm a huge fan of Litecoin right now. I think it's one of the best to go into. I think it's someplace that I would actually, if you're going to be in something, I think you hide out in Litecoin based on relative value. But absolutely agree with you, Gary. Get to a point where you can play with house's money, but have some exposure in case we don't get those pullbacks. Because I do think there will be a day where somebody like me gets burnt because I'm trying to buy at 20,000 and all of a sudden in a year and a half, now I'm trying to buy at 87,000, right? Because now the money is, because it just doesn't retrace. I don't know if we're there yet, but there's going to be the day where the person who tries to buy, these lows gets burnt.
Mm-hmm. So back to my original point, June monthly targets are great short-term levels for profit. And I'm telling you, each one is like, you can look at all these different coins from the flush down in May. Most of them are 40 to 60 to 80+% opportunities in the short term. So if you were paying attention to the support at all over the last 2 months, nice buying opportunities, nice short-term profit levels, and take Gary's approach, like dollar cost average in, look at those lows and be willing to buy there. I think Tyson, I agree with Tyson. I don't think we're going to see 2021 highs first. I think this is a nice pop. This is a nice little relief rally. People are probably excited to see cryptos moving again, but I think we're just going to come back up, test some levels, come right back down. Now it's a good time to be a trader. Buy low. If you want to take profit, but buy low, buy low, buy low, and see where this thing goes, and have that house money, have that long-term stash away investment money. But I mean, look for profits now. I think you can turn and transact with these cryptos and make some pretty good profits in the next 6 to 12 months, and also sit on it for 2 years and see that we're finally making new highs in 2 years and having another crazy rally. And
you want to at least make with the commissions that they charge on buying cryptos. You want to go for those 40, 50 pip returns, percentage returns on your trade. So if you're buying in at $100 and you're selling off it at $140, those are the things that you want to do, and you can get it done. I mean, we all know cryptos can offer those type of returns in a very short period. In fact, that just happened over the last 3 or 4 days from $100 to where it's at now on Litecoin. So it can happen. Yep. And you don't have to chase after those 3,000 percentage moves. You just go after those 20, 40, 50 I keep saying percentage moves. But yeah. All right, guys. I think any final words, Tyson and Chris, for this week that traders need to pay attention to? We know we've got the Fed's rate decision on Wednesday. Anything else we need to just talk about?
Yes, really quickly, I want to say that if anyone would like to join myself, Tyson, you're hosting for us tomorrow, correct? 11 o'clock? Yep. If you want to join myself and Tion and Tad and Tyson, and you want to see what we're doing this week, look, myself, Tad, and Tion are having a trading battle this week. It's may the best trader win. So I started planning last night. I started placing trades this morning. And the gun has gone off, and now it's the finish line until Friday. So if you want to see what we're doing and see what what our methodologies are, what systems and robots or manual trades we're setting up, how we found directional bias, come and join us for a webinar on Tuesday at 11 o'clock. And I have that link right here. So let me copy that, and I'll post this in the chat. So this is a Tuesday, what is this? Trading battle. Tuesday trading battle. 11 a.m. Eastern time. There is a link inside the chat right now if you want to join. Click on that link and just sign up. Save your spot for tomorrow's session. Tyson's hosting. It's going to be a great session and a look in all 3 of our platforms, live trading. What are we doing? And hopefully, from what I filtered out, I've got about 1,000+ pips of opportunity that I'm looking at for this week. And that's it. That's a start. And then I'm going to also keep optimizing some robots and probably release some robots tomorrow and let it trade, make me some extra pips.
If it wasn't for the copyright infringement, I'll be playing the Rocky song right now, Eye of the Tiger.
Exactly. Yep.
No,
all right, guys.
Great announcement, Chris. Yeah, I'm excited about it. In my perspective, there is not going to be any loser in this. All 3 of you are going to do phenomenal, and the students are going to be the winners also because they're going to watch 3 amazing traders battle it out. So it's going to be fun.
Agree.
Absolutely.
With different approaches. We'll see different approaches, which will be fun.
Absolutely. Well, fantastic, guys. Well, that's it from us today. Hopefully everyone had a great time and learned something from us today. If you haven't subscribed to the channel yet, go ahead and subscribe to the channel. Also, I like to say smash the like button if you like the content of the video. We definitely bring more content as we go through the weeks and the months as we move forward with the AAA session. There's a whole big change going to happen with the AAA session. I'm looking forward to those changes. We'll let you know what those changes are as we start finalizing the details. But with that being said, Chris, Tyson, always a pleasure. We'll see everyone back again next week. Make sure you guys join Chris and Tyson and Tion and Tad in tomorrow's webinar, right? These tomorrow?
Correct.
Yep.
11 o'clock.
All right, cool. Yep. All right, guys. With that being said, happy trading. We'll see you next week.